All right, welcome back inside our proactive newsroom. And joining me now is Stacey Morris. She is the head of energy research at Vetify. And Stacey, it's great to see you again. How are you?
Doing well, Steve. Thanks for having me.
Yeah, so we're talking about the Illyrian Midstream Energy Dividend ETF. And before we go any further, maybe just remind everyone a little bit about what midstream is so we understand what we're talking about.
Sure. So midstream or energy infrastructure is really the part of the energy value chain that is providing what I like to call the shipping and handling service. These companies are getting energy where it needs to go and really kind of connecting supply and demand. And what's unique about midstream is that they're providing services for fees under long-term contracts. So they have much more stable cash flows than other subsectors of energy. And so this is a space that tends to be a little more defensive, a little more resilient, which I think is pretty topical in the current market environment.
Yeah, absolutely. It's been a crazy market environment for to say the least. But let's talk about some parts of it though, and the recent weakness in oil that we've seen, and really what the drivers are for those prices.
Yeah, so on the oil side, we've really seen weakness driven by both supply and demand issues. So if you look from April 2nd to April 8th, US oil benchmark prices went down, from over $70 to below $60, so down 17% over that time frame. On the supply side, you had OPEC Plus come out and announce that they were going to be adding back more barrels in May than people were initially expecting, essentially increasing output about 3 times as much as what was planned for April. So that was kind of a negative surprise. And then on the demand side, with tariffs, there's just been a number of concerns around the outlook for the global economy, for trade, and then what that means for oil demand. Also, with the tariff concerns, there's been more recession talk. And typically in a recession, you would expect oil demand to be a little weaker than it would be otherwise. So you've got more supply coming into the market in May, and then you've got demand concerns kind of growing as well. And that's really been putting pressure on the commodity here.
So if people are being cautious about oil prices, would investors then maybe prefer midstream? Is that sort of the way things usually go?
That's right. So what's nice about midstream, because these companies are, operating pipelines, processing hydrocarbons, storing hydrocarbons, helping facilitate exports, they're earning those fees, they're generating more stable cash flows, and they're less sensitive to what's happening with oil and natural gas prices. So for investors who are cautious on oil or maybe don't want some of the volatility that you might see, for example, in an oil and gas producer, then you're probably going to favor midstream in this type of environment, just given its defensive qualities. We talked about the fee-based businesses and stable cash flows. These also tend to be companies that generate good dividends. And then you've also just got a little bit more natural gas exposure in some of these companies and exposure to natural gas infrastructure, which can be positive in a little more volatile oil environment. So for those types of reasons, investors probably are going to be more in favor of midstream if they want to have energy exposure because maybe they're worried about inflation or could see oil prices going up over time and they just want a little more heartburn. Midstream might be a better place for them to ride out this volatility.
Okay. Stacey, speaking of natural gas, tell me a bit about the outlook you're seeing for natural gas and the implications for midstream.
Sure. So the long-term outlook for U.S. natural gas demand has really gotten a lot better over the last year or so. Natural gas demand in the U.S. Is expected to grow about 25% from 2024 to 2030, and that's a pretty big move. And so for midstream companies, they're going to participate in that in a couple ways. Obviously, they help get natural gas where it needs to go and to demand points like utility facilities or LNG export facilities. But they also help facilitate production growth. So they're gathering natural gas from the well, they're processing it into usable form, and then again, getting it into those larger pipelines. So there's a lot of opportunities for midstream here as we see natural gas demand grow, and with that, production growth as well. Now, most of that natural gas demand growth is coming from LNG exports. Those facilities are already under construction. There's good visibility to that demand. And then you also have demand growth from things like industrial demand, power demand, data centers, and AI. So we've seen a lot of upside for U.S. natural gas demand and a lot of growth opportunities for midstream associated with that. The underlying index for the ETF you mentioned is about 65% companies that are predominantly focused on natural gas infrastructure. So again, that kind of bias towards natural gas and the positive outlook there, I think, can be a nice feature for midstream investors, especially with all the oil volatility that we've seen.
Yeah, well, one thing for sure, it's probably not going to end anytime soon. Anyway, the markets continue to be an interesting one to watch, and we're good to have you along to sort of share with us your thoughts on it, Stacey. Thanks so much. Good to see you again.
Thanks, Steve.
All right, Stacey Morris, the head of energy research at VettaFi.